Hello there, it's Olamide Dolapo Adeleke here again. I trust you're all well, and on today's episode we'll be talking about, of course, finance. We always talk about finance, but we're talking about 6 tips from the book Rich Dad Poor Dad. And for people who are not familiar with the book Rich Dad Poor Dad is a book that was written by Robert T. Kiyosaki in the year 1997. And it's a book that advocates the need for financial intelligence, financial independence, and also talks about starting a business and investing in real estate and other financial instruments that includes bonds, stocks, and all of that. So it's a must read for people who want to take finance, their financial journey or their financial life seriously. We're talking about the top 6 tips from the book Rich Dad Poor Dad, in no alphabetical order. It's just that I can relate with, that I'll be sharing with you. And without much ado, let's get right into it. And the first tip from the book Rich Dad Poor Dad, in no particular order, is make money work for you. Make money work for you. The rich, they see money as a tool. They see money as a tool to make money for them. Unlike the poor see money as an avenue to spend even more money. What do I mean by this? The rich makes use of their money to make more money. So for example, financial instruments like stocks, like bonds, like fixed deposit accounts. Let me just start with fixed deposit accounts. Give you an idea of what these financial instruments are like. So the fixed deposit account, like it says, it's an account where you deposit a fixed amount of money, where you and the bank have an agreement where they'll use your money maybe for investments for a fixed period of time, probably 3, 6, or even 9 months. So they use your money for a particular tenure, and you earn high interest rates, unlike current or fixed accounts where you earn meager or little interest rates. But for the fixed deposit accounts, you earn even more interest rates. Let's look at bonds. Bonds is an investment product issued by governments or even corporations, where they use your money for expansion of the business or for investing, and at the end of that cycle they pay you a particular amount or dividend for making use of your money. Also, mutual funds is a kind of vehicle where a pool of investors' money are used to invest in financial instruments, and these mutual funds, they are taken care of by professional money managers, so they know what they use their years of experience in investing in the financial market to ensure that your money earns returns. So that's what mutual fund is all about. So make your money work for you by investing in investment instruments or even in the real estate. So that's one tip from the book Rich Dad Poor Dad. And the next one is, your mindset may just need a reset. That's the word there. Your mindset may just need a reset. What do I mean by this? Some people have the mentality that you have to be born rich in order to have a headway in life. And that is far from the truth. It's a blatant lie. The fact that you must originate from a rich background to be successful in life is a lie. There are people who have rose up from a background where was next to nothing. They had no money, and they rose to become captains of industries, financial gurus, financial investment gurus, and all of that. And what took them to that point is knowledge. They invested in high level knowledge. They invested in their financial skills. They invested in discussing with people, with financially intelligent people, by going for financial seminars and all of that. So make it a point today that you invest in knowledge by reading books, by watching videos like this that enlighten you about investments or financial literacy. Attend financial seminars where they discuss about money, where they discuss about investments, so as to broaden your horizon, your mind on what to invest in and what not to invest in. That's why Ponzi scheme is very popular because a lot of people don't know what they are investing in, and because of greed, a particular emotion, people don't want to delay gratification. They want to make it big at once, and it's not done anywhere. So that's why you need to invest in proper financial knowledge. Another thing that you need to do is to recondition your mindset. It must move from a point of I can't afford it to how can I afford it. You need to fine-tune your mindset. You need to fine-tune your mentality about money. It's a mindset. So expand your horizon by getting financial knowledge. And the next one, or the third tip from Rich Dad Poor Dad, is financial literacy is not optional. Financial literacy is not optional. You need to stay abreast of information about money. Invest in books, like I said earlier. Invest in going for financial seminars. Learn about finance. So stay abreast about information from finance. Financial literacy and intelligence will help you to maintain your wealth because you are enlightened. So you know what to invest in and what not to invest in. So financial literacy is not optional. And the next one, or the fourth tip from the book Rich Dad Poor, is work to learn, not just to earn. And I'm not saying that you should work for free, because a lot of people have responsibilities that they need to attend to. So working for free might not be the best option. It will not pay the bills, of course. But if you're a young person, probably a recent graduate who is dependent on his parents, I would advise you to not just work to earn, but work to learn. In the sense that if you see an internship that maybe is not even paid, maybe an unpaid internship, go for it, as long as you know that you'll be getting knowledge, you'll be getting value for going on that route. Ensure that it's not everything that is money. Sometimes you need to sacrifice to get information about the industry, to sharpen your business skills. So go for that internship, go for that unpaid work or internship, especially if you are young and you don't have responsibilities to carry along. So the next one, which is the 50 pound finance from the book Rich Dad Poor Dad, is assets and liabilities make the difference. What do I mean by this? Assets are things that help you make more money, while liabilities are things that take money from your pockets. So examples of assets are lands, they are buildings, they are your car. Although a car is a depreciating asset. What do I mean by depreciating asset? The moment you buy a car and you drive it from the car lot, it depreciates in value. So if you buy a car for 3 million naira or 5 billion naira, it drops in value the moment you drive it from the car lot. So it's as simple as that. It's an asset, but it's a depreciating asset. So use your money to get assets that can make you money. So ensure that you don't get liabilities. So liabilities are things, like I said earlier, that takes money out of your pockets. Examples of them are loans, your tax. So ensure that you invest your money in assets. And the final tip from the finance book, which your company matters. Your company matters. What do I mean by this? I don't mean a physical structure. I don't mean a physical building. I mean your circle. People that you surround yourself. What do you discuss? Are you just discussing people? There's a quote that says, people that discuss people head nowhere, but people that discuss ideas are known to people that shake the world. Ideas rule the world. So what do you discuss with your friends? What do you discuss with people when you are joined or in a circle together? So the people you surround yourself with will either make or mar your life. And that's the truth, because most of the time you attract who you are. So make it a function today to invest in profitable relationships. People that can invest financial intelligence, not even only financially, relationship-wise, spiritually, in every form of life. People that add value to your life. So your company matters. Your company matters. And for example, if you have people that are financially stable, even when you have troubles, they can assist you in bringing you back up. But if you are surrounded with people that they are not valuable, when you have problems, they can't help you. They can't even help themselves. So how will they help you? So that's one important or one reason why your company matters. So with all of these tips that I've talked about in the book Rich Dad Poor Dad, ensure that you invest in financial knowledge. Even before you invest your money in anything at all, find out what it is about. People suffer because of ignorance. So don't just put your money in something. Your friend just comes to you, hey, this is what is coming out in town, this is what is trending in town. I say, okay, let me put my money there. Yoruba always say that that means that you'll be caned or you'll be severely dealt with on your return. Ensure that you invest in financial knowledge, go for financial seminars, invest in books, invest in quality relationships. Make your money work for you, in essence. So with all of this, I'm sure that you're going to take one or two things and run with it. My name remains Olamide Dolapo Adeleke. Ensure that you like, subscribe, and you share it. Peace out.